Hi there. Are you tired of blowing your account and you're looking for a simple but very effective strategy? Then this video is for you. So in this video, I'm going to be giving you a free, simple but very effective strategy that you can employ in your daily trading to start making a lot of money. So stick around till the end of the video and I'm going to see you right after this intro. Okay guys, now before we continue, I first want to explain to you how the strategy works. I want to give you all the steps and all the rules to follow so that you can fully carry out the strategy and you can start making some serious money in forex trading. Now, the first rule is that we are going to be using the strategy only on the 30 minutes time frame, the 15 minutes time frame, and also we're going to be using the 5 minutes time frame and the 1 minute time frame to confirm our entries. Now, the biggest thing in this strategy is the Asian trading session. So we're going to be taking advantage of the Asian trading session, but we are not going to be trading during the Asian session, but we wait for the Asian session to play out, and then that's when we take our trade. So the first thing is we want to wait for the Asian session to play out, and then we want to mark the high and the low of our Asian session. So let's say this is our Asian session. When we mark out the high, this is going to be the high of our Asian session, and this is going to be the low of our Asian session. So this is the high and the low of our Asian session. Now, for buying opportunities, we are going to wait for the market to break to the downside. So let's say we have the market push to the downside like this, breaking the low of the Asian session. That's when you're going to be looking for the buying opportunities. And then for selling opportunities, we're going to wait for the same thing to happen. We're going to wait for the Asian session to play out first to give us a structure that we can work with, and then when the Asian session is done, we mark the highs and the lows of the Asian session. We mark the highs and the lows. And for buying opportunities here, for selling opportunities, we are going to wait for the market to break to the upside. So two things you should wait for: you wait for the market to break either to the upside or the downside, and when that happens, that will determine the kind of trading opportunity that you're going to be looking for. So if it breaks to the downside, you look for buying opportunities, and if it breaks to the upside, you look for selling opportunities. Now here's why this strategy works: because there's a lot of manipulation in the market, and during the Asian session we tend to have some sort of consolidation in the market. The market tends to take out the highs, equal highs or equal lows, or the low or the high of the Asian session to generate liquidity before it takes the original direction. So this is a gimmick that the market does in order to generate liquidity, and we are going to be taking advantage of this to make serious money from trading. Now when the market breaks to the downside, you look for a trading area or a trading zone or a trading order block. So let's say our order block is somewhere here. We wait for the market to reach this order block, and then this is where we open our buying position. So we're going to mark our order block like this, and then this is where we take our buy trade. This is where we take our buy trade, stop loss just below the order block, and then our take profit is going to be exactly on the high of our Asian session. Okay, and then for selling opportunities, we wait for the market to break to the upside. When the market breaks to the upside, we want to look for selling opportunities. Our take profit is going to be exactly on the low of our Asian session, and we tend to look for an order block right around this area. Now this strategy works best if that order block is followed by an imbalance or a fair value gap. Now I'm going to dive into real charts and I'm going to show you how this strategy works. This strategy works, guys. Watch the video till the end. Okay guys, now we are on the real charts, guys, and we are going to apply the strategy. So the first step you want to do is to go onto your indicators. So this indicator is going to help you by marking the highs and the lows of the Asian session for you, so you avoid stressing yourself with marking the highs and the lows and knowing when the Asian session started and knowing when the Asian session ended. Now you want to go into your indicators and find an indicator called the Asian indicator by Nico. This is by Nico 948. So you want to apply this indicator on your chart. Remember, we are using only the 15 minutes and the 30 minutes. Now, as you can see here, this is the high of the Asian and this is also the low of the Asian. And then the market here broke to the downside of the Asian and it didn't even reach our order block. It started pushing to the upside. So where is our order block? Our order block that we're going to use is this one. So you can have multiple order blocks. You know, guys, you can always have multiple order blocks. You just have to buy when it reaches your order block, and if that one fails, you buy on the second order block. So there is no 100% strategy in this forex trading, guys. So this one for today, it didn't work out, it didn't reach our order block, but as you can see, it's already pushing to the upside, or it can even reverse from any point here before it reaches our high. So as long as it hasn't reached our high and then it pushes to the downside, we can always enter our trade here and then push to the upside. But if it takes out this high over here, we are no longer looking for a trade that day. So you don't have to trade every single day, you know. And if you want to trade every single day, you can, what you can do is to find pairs, forex pairs, multiple forex pairs. Let's say you take the Euro USD, you take the GBP USD. And one thing that I forgot to mention, guys, you should never trade this strategy on pairs that have Asian currencies. So you should never trade like the Euro JPY or the USD JPY. All the pairs that are in Asia, you should never trade this strategy on them. So now let's continue. As you can see here, today we are still waiting for the market to reach into this order block and push to the upside. But here, as you can see, this the day before today, obviously that was Friday, we had a break to the upside and the market reacted on our order block. So where was the order block? Here is the order block. So this is our order block, and as you can see, that order block was followed by what? It was followed by some serious imbalance. So this is where we take our selling position to the downside. As you can see, it was followed by some serious imbalance, and then this is where we take our short position. Buy from here, stop loss just here, and then our target is going to be the low of that. As you can see, this say 2.61, but it's still a good trade. Okay, now guys, let's move on. As you can see, there are gonna be days where you're not going to have a trade. As you can see from this one, we had the high, we had the low, the market broke to the upside, and it kept on going to the upside because we didn't have an order block. And when we finally had an order block, which is somewhere around here, the market hasn't reached that order block, but the day was over, so we started focusing on something different. So for the whole day during the London session and also the New York session, the market didn't react on any order block that you can trade from. As you can see, this long candlestick was because of some news event that took place. But if you check after that news event, the following day we had the high, we had the low. The market broke to the upside. We had an order block followed by some sort of imbalance. And where is the order block? Here is the order block. And the market reacted on that, and then it sold to the downside. This is another trade, another selling trade here. I think we are going to get a 1:3, guys. Let's check. So yeah, that's a solid 1:2.93 is the same as 1:3. Let's continue. As you can see here, guys, and then another thing I forgot to mention, the candle must close to the outside to signify a break out of a break out of the Asian session. So as you can see here, we broke to the upside by a week, and then also this side we broke to the downside by a week. So this and this do not count as break out of the Asian session, but these, when the market did this, it pulled to the upside. So this here, let me highlight it, this here, this move here was the break to the upside, and then now we look for what? We look for selling opportunities. So by using this strategy, you could have caught the news, guys. You could have caught the news event, and this is the order block here. You could have caught the news event. Now I'm gonna go to, as you can see, this was a perfect entry here, and this is your selling point, your stop loss, and where's your take profit? Your take profit is around this area. As you can see, guys, still around 2.95. so like I said, most of the time you're gonna get a risk reward of 1:3, and that is what we're going to be targeting for. And another way of increasing your risk reward ratio is by using a confirmation entry. So I'm going to make a video about how to use confirmation entries, like the 5 minutes and on the 5 minute, and also on the 1 minute. So that's when we wait for the market to tap into our order block, and then we start looking for things like change of characters and QMLs. We start looking for order blocks, breaker blocks, all those kind of things. Now, one disadvantage of a confirmation entry is that you can sometimes, not most of the time, but sometimes you are going to miss perfect entries. Like this news event here, with a confirmation entry, you were most likely going to lose this trade. Actually, we're gonna miss the trade. We're not gonna lose it, but we're gonna miss the trade. Now, I want to show you that this also works on other pairs. So I'm going to go to a different pair. So let's talk about, let's say, the GBP/USD. Let me look for GBP/USD. Okay, guys, now we are on the GBP/USD. Guys, don't forget, it's a very powerful strategy, and I'm giving it out there for free, guys. Now, as you can see, today the market is still playing out. This is the low of the Asian session, this is the high of the Asian session, and neither of these has been taken out. We haven't taken out the low, we haven't taken out the high. We need the candle to close above either the high or the low for us to say that now we have taken out what? We have taken out the high or the low. Now, as you can see, if we break to the upside, we are not going to be trading today because we don't have an order block on our left side. But if we break to the downside, we might look for buying opportunities. So either on this order block here, this is a perfect order block. As you can see, there's some sort of imbalance. Actually, I think I am going to wait for this trading opportunity, and I am going to enter somewhere around this area and a push to the upside. And I'm not saying that's a trading signal, and I'm not saying that it's gonna work out 100%. You know, there's some serious risk involved in trading in the forex market. Now let's continue. As you can see, let's see what happened yesterday. We had the high, we had the low of the Asian session. These weeks, remember, they do not count. And then these candles here, they broke to the downside, and they also closed to the downside, but we didn't take out the high here. And because we didn't take out the high, we were still expecting to catch a trading opportunity, a buy, and we had two trading points. I'm not gonna lie to you guys, we had two trading points. This was the first one. I would have waited for this trade, and then we had another trading point, which was this one over here. As you can see, there's an order block on that long wick there, and the first one didn't work out, guys. The first one didn't work out. And if you know some SMC concepts, you can see that we had some sort of liquidity generated here through equal highs, and then this order block here, it failed to hold, which was also a good order block if you ask me, but it failed to hold. It happens sometimes in the market, you know, where the market just goes against you and you end up not knowing why it went against you. But we lost this trade. Okay, we lost that trade, but we caught this one here. So we caught this buy here. We caught this buy here, our take profit, the high, and stop loss here. Now this was a big one, a 1:2, This is a what? This is a 1 is to 6.97, which is a 1 is to 7 risk reward ratio. That's a good trade, guys. That's a good trade. So it simply means you have to lose again 6 times before you can break even. And as you can see, this strategy, it rarely loses like 3 times in a row. Doesn't lose 3 times in a row. So as you can see here, another perfect trade, guys. We have this candle here. This was our order block, even though it was not followed by some sort of imbalance, but this was our order block because we have the structure here. We have a push to the upside, and then we also have another push to the upside. That these are break of structures, that's if you know SMC concept. And we also have this candle here, which is going, now this is not, I wouldn't call this our order block, but I would rather call it our demand area. That's our demand area. And then the strategy, the high and the low of the Asian session, like I mentioned. And then the strategy, the market broke to the downside because we can see it's a clear break to the downside. We tap into our demand and then we push to the upside. Our take profit, okay, wait, let me get rid of this. Where is our take profit? Our buy is here, take profit there, and our stop loss is there. Now this is very small. This is like a 1 is to 2.82. It's like 1 is to 3. So I told you guys, most of the time we're going to be getting 1 is to 3, but trust me, it's worth it. This strategy works. Go out there and try this strategy for yourself. Okay guys, this brings us to the end of the video, guys. Don't forget to like the video, don't forget to subscribe to our channel if you haven't subscribed, and I'm going to see you guys in the next video.